3-4 Prepayment financing. Which of the following statements concerning the Real Estate Settlement Procedures Act, RESPA, is false? What is real estate brokers may not split a commission with cooperating members of the multiple listing service? The Real Estate Settlement Procedures Act, or RESPA, was enacted by Congress to provide home buyers and sellers with improved disclosures of settlement costs and to eliminate abusive practices in the real estate settlement process. RESPA does allow commissions to be split with parties that actually perform services, like the MLS. The federal notice of right to rescind, if applicable to a loan, must be given to a borrower if : what is the borrower's residence is the security for the loan. For loans that are not being used to purchase a primary residence but a borrower's primary residence is the security for the loan, refinances, home equity loans, borrowers have a 3-day right of rescission. The borrower can exercise this right until midnight of the 3rd day after a transaction has been consummated. Exercising this right voids the agreement and removes any liability from the borrower. Which of the following statements is correct concerning the relationship between an effective interest rate and a nominal interest rate? What is the effective interest rate? Is the rate actually paid by the borrower for the use of the money. The nominal interest rate is the rate specified in the note. Effective interest rate is the interest rate that the borrower actually pays on his loan, while the nominal interest rate is the interest rate specified in the note. Note, this is different than the answer which mentions the rate a buyer will pay as noted in the loan application because that will happen in the future, while these terms refer to something that has already happened. If a seller wanted to relieve himself of the primary liability for payment of a trust deed and note, he must find a buyer who is willing to. What is assumed the trust deed and note liability? When a buyer assumes a mortgage from the seller, they are relieving them of any future obligations. The monthly payment on a mortgage loan is, by statute, considered late when received by the lender. What is more than 10 days after the due date? Payment is considered late if the lender receives it more than 10 days after the due date. Lenders know that the lower the loan-to-value ratio, the higher the. What is equity? Loan-to-value ratio is a ratio of the percentage of the appraised value of a property that a lender will loan. The lower the ratio, the higher the equity. The finance charges recorded on the truth in lending statements would include all of the following except, what is recording fees and title insurance premiums? These are considered legal, not financing fees, and therefore are not part of the truth in lending statement. When processing a real estate loan application, a lender would correlate the characteristics of a borrower, loan and property to make. What is a loan commitment? In determining whether or not to make a loan commitment, a lender will examine the borrower's income, their character and the property. Which of the following loans would be exempt from compliance with the Federal Truth in Lending Act based on the type of loan itself? What is an agricultural loan by a bank? The Federal Truth in Lending Act was designed to protect the borrower by requiring the lender to make a meaningful disclosure of credit terms to the borrower. The Truth in Lending Act does not cover agricultural loans. The maximum permissible loan-to-value ratios are: what is based on sale price or appraised value, whichever is lower. Although various banks, mortgage companies and programs have different LTVs, the lower, more conservative number is used. During a period of high inflation, the Federal Reserve Board can limit to some degree the expansion of currency by what is increasing reserve requirements of members' banks. During a period of high inflation, the Federal Reserve Board can limit to some degree the expansion of currency by increasing reserve requirements of member banks. A buyer taking title subject to a mortgage should request a what is reduction certificate? A reduction certificate is a document signed by a lender stating the outstanding amount on a mortgage loan. The purpose of Truth in Lending, Regulation Z, is to: what is make information available concerning the cost of credit? The purpose of Truth in Lending, Regulation Z, is to make information available concerning the cost of credit. Regulation Z is the part of the Truth in Lending Act of 1968 that promulgates rules that protect consumers against misleading practices by the lending industry. Insurance for a mortgage loan may be provided by, what is FHA or private mortgage insurer? Federal Housing Administration, FHA, insures lenders against loss in the event of a default. FHA loan might approve a loan to buy 1-4 units of residential property to be used for rental purposes. To get an FHA loan, you go to institutions that are authorized to deal with the FHA. There is no FHA office. Private insurers can insure loans when the borrower does not qualify for the FHA loan. Which lender is the major source for junior loans negotiated today? What is private lenders? A private money lender is a non-institutional, non-bank, individual or company that loans money, generally secured by a note and deed of trust, for the purpose of funding a real estate transaction. Private money lenders are generally considered more relationship-based than hard money lenders. A standardized term for expressing the true annual cost of borrowing is expressed as the what is April. APR stands for annual percentage rate and expresses the true cost of the loan by factoring fees such as points, recording fees, appraisal fees and such into the interest rate. For example, A mortgage that showed an interest rate of 4.85% on the promissory note might have an APR of 5% when associated costs are factored in. Insurance: a contract under which, for a consideration, one party agrees to indemnify another for a possible loss under specific conditions. For a mortgage loan may be provided by, what is FHA or private mortgage insurer? Federal Housing Administration, FHA, insures lenders against loss in the event of a default. FHA loan might approve a loan to buy 1-4 units of residential property to be used for rental purposes. To get an FHA loan, you go to institutions that are authorized to deal with the FHA. There is no FHA office. Private insurers can insure loans when the borrower does not qualify for the FHA loan. Which of the following statements about housing loans with federal government support is false? What is the federal government supplies funds to the lending agency? The federal government supports many aspects of home loans to make it easier for citizens to purchase homes. For example, the FHA insures lenders of federally backed loans against losses for mortgages on single-family residences and multifamily properties, and VA-backed loans may be used to purchase condominiums. The federal government does not, however, supply funds directly to lending agencies. Note, this question asks which of the following statements is false, and it's false that the federal government supplies funds to the lending agency. The maximum permissible loan-to-value ratios are: what is based on sale price or appraised value, whichever is lower. Although various banks, mortgage companies and programs have different LTVs, the lower, more conservative number is used. If advertised a loan, which of the following would violate Truth in Lending, TILA, laws? What is no down payment required? No down payment required triggers the Truth in Lending disclosures because it is a specific statement about only one aspect of the financing. Easy terms does not trigger the regulation because it's non-specific. When processing a real estate loan application, a lender would correlate the characteristics of a borrower, loan and property to make. What is a loan commitment? In determining whether or not to make a loan commitment, a lender will examine the borrower's income, their character and the property. The liquidation of a financial obligation on an installment basis is commonly termed, what is amortization? Amortization is the liquidation of a financial obligation in installments. When financing new construction, the lender usually releases the final payment to the builder. What is after the lien period has expired? A lien is a form of security interest granted over an item of property to secure the payment of a debt or performance of some other obligation. A new construction lender will generally hold at least 10% of the loan amount to help protect the new construction against any mechanics or liens. Once the state's limit for these liens has expired, the lender will release final payment to the builder in a lump sum. Which of the following defines a mortgage loan? What is a loan collateralized with real estate? A mortgage is a loan in which property or real estate is used as collateral. The borrower enters into an agreement with the lender, usually a bank, wherein the borrower receives cash upfront then makes payments over a set time span until he pays back the lender in full. A form of public notice filed against certain lands, stating that a court action has been instituted, is known as, what is a lis pendens? A lis pendens, Latin for lawsuit pending, is a written notice that a lawsuit has been filed concerning real estate, involving either the title to the property or a claimed ownership interest in it. When a lender speaks of discounting, the lender is probably referring to, what is the loan proceeds disbursed by the lender are less than the face value of the note. Discounting is selling a note for an amount that is less than what is owed. Excluding the down payment, a home buyer would pay the lowest closing costs if they were to use, what is a CalVet loan? CalVet loans are actually a type of land contract. As such, only equitable title, right to use and possess, is transferred to the buyer while the Department of Veterans Affairs retains legal title to the property in question. The buyer makes payments until the loan is fully paid off. Because there is no lender involved, it has the lowest closing costs. In an installment land contract, what type of title did the seller retain? What is legal? An installment land contract is a type of seller-financed purchase contract. The seller retains legal title until the loan is paid off. The buyer receives equitable title at closing. The monthly payment on a mortgage loan is, by statute, considered late when received by the lender, more than 10 days after the due date. Payment is considered late if the lender receives it more than 10 days after the due date.